Hey, we don't even need an extra person. I'm just doing it myself. Welcome back, Dispatches. The skies are blue and the charts are green for a welcome change. Nick's back from holidays.
Yep.
In fact, you're not back from holidays. You're just here for the day.
But the correlation is unnerving. So it was pointed out by my boss when I came in this morning. He was like, "Hang on, charts are up and you're back. Do we need to like cancel all the remaining leave that you have?" Yeah.
Well, it was the markets were brewing while you were away. So also maybe if you're away, spend the next month off, then come back and we'll be up 30%.
We can spin it like that. Yeah. So I need to actually take more time off, is what you're saying.
Correct.
Okay. All right.
You're here too much. It's affecting the markets. You're messing it up by being here.
Yeah. Okay. We'll see.
Too many chefs spoil the broth.
How many more sayings, axioms do you have for us today?
I've got more. You know what I've got more of today? Analogies.
Okay.
Cliches. I've got a ton of them as well. But I'm going to stick with analogies today. So I've done my research for a change.
Okay, cool. This is the metaphor-heavy version of Moonshot Dispatch.
And Nick this week has charts, lots of charts.
Yeah, I've found some just across the week, or I guess the last 2 weeks. We were away last week. My fault. I was brewing.
Yes, your fault.
Too busy brewing Bitcoin for everyone. You're welcome. But yeah, I've been sort of noticing some interesting charts that we can have a chat about them and see if they're worthy or not.
Hang around for charts. Nothing else.
And hang around for analogies, I guess.
Thank you, Nick. Thank you. Yeah. All right. So the macro this week. You know what? I've even provided a summary of all the things we're going to talk about this week. So if you're hanging around and wondering what you're going to get this week, I can tell you. It's in my summary. You wait. All right. So the macro this week. So the US-Iran conflict. Since you've left, Nick, we've both had a ceasefire and a resummation of hostilities.
Yes.
Was that also your fault? Probably. So the ceasefire collapsed. Surprise, surprise. Now, and not also that, the Hormuz blockade is now in effect, but not from the Iranians anymore, the Americans.
Well, I feel like they're just adding on. So the Iranians are blocking it. The US are also blocking it. I reckon Chinese are going to get involved. They're going to be a third block. I mean, Aussies, sure, why not? We'll do a block or get involved. A bit of FOMO. You're like, oh, I want to do a block too.
Yeah. But despite all, actually there was a ceasefire, Bitcoin went up, then hostilities resumed and Bitcoin still went up.
Yeah. Obviously, I mean, we can't blame the war anymore. It is just me.
It's just you.
Yep.
I'm giving you all the credit. One thing I can't give you credit for is consumer sentiment, which is at all-time lows. The University of Michigan consumer sentiment, the lowest since 1952. Well, not all-time, since 1952.
Yeah.
What was before then?
I noticed that. It says on this thing, all-time lowest, and then like in big text, since 1952. Make up your mind.
Well, that was before my time.
Yeah, this is a funny one. So this is like not a crypto sentiment thing. This is just sort of a general markets thing where they go out and survey US households and go, hey, like, are you okay? What do you think is happening? How do you feel right now? And what do you think is going to happen in next year and in 5 years? And kind of get like a gauge. And people are not loving life right at the moment. They really think that the outlook is bad and things are bad right now. I guess, I don't know, like when it costs a lot of money to drive anywhere and people are trying to fill up at petrol stations and there's no petrol, like, doesn't create for a great environment, I suppose.
Yeah, I had a friend who sent a message around on a group chat saying, just a screenshot of them filling up their tank and costing like $230. Jeez. It's insane.
Yeah. Okay. So someone replied. I saw a funny reply to that tweet actually. This guy says, Trump promised we'd get a terrible economy, foreign wars, and high prices if I voted for Kamala Harris. He was right.
Nice. Well, in other talking points, because I'll go through the summary and then we can come back to all the good stuff, Trump. ETF this week, in ETF news, there's a new ETF in town, Morgan Stanley. It has had its best ever ETF launch. So there you go, Morgan Stanley. I can't remember if Morgan Stanley was one of those standoffish types that said, no, we hate Bitcoin. I don't think they weren't.
They were pretty forward on Bitcoin stuff. Yeah. But, I mean, they've always sort of treated it cautiously and suspiciously, but they weren't like the Jamie Dimon.
They weren't calling it rat poison, were they?
Yeah.
But they had 31 mil almost on their first day, which is their best ever launch. And not too far behind, actually, BlackRock's initial day, which is like 40 odd million. And those volumes have doubled and tripled in the days following. Crazy. Yeah. A big mine, as we know, Tom Lee, he's happy as well because Bitcoin, even not just Bitcoin is up, Ethereum is also up 12% on the week.
Actually, Jared, can we throw up that the bar chart graph, the one where there's one outlier? Yeah, that one. So if you, this is, so in the chart over here.
I am the chart now.
Yeah, you are the chart now. I thought this is interesting. So like the story behind this chart is to show how good Hyperliquid is. Hyperliquid's the one on the very right-hand side, the only one in positive territory of all the data. So this is a chart of all the treasury companies that have, used various assets, various crypto assets to, pump up their treasury, basically. Hyperliquid treasury company is the only one that's actually in profit. Everything else is down. The big orange one on the left, that's Strategy. The massive one that is by far and away the biggest downward one is
Tom Lee.
Tom Lee's Bitmine. So as much as it is up and like there's fist pumping and stuff, yeah.
How bad's he down? Like
He's down so
many
bad.
billions.
Yeah. Anyway, he's still ploughing along. I mean, I honestly think it will come good, but I feel like there's faster horses in this race. And this chart is probably showing the answer to that question. Probably not
That's
financial
a heavy
advice.
horse. You know what though? So he's almost done buying though, because he was looking to get 5% of total supply. He's now at 4%. So he's kind of done buying. So he's just got to wait for that big saggy price action to kind of get back up, I guess.
Yeah. And if ETH eventually does outperform, and as I've said this so many times, like Ethereum has got everything else going for it. It's doing so well structurally, like the stuff that they're building, the roadmaps they've got, the groundswell, the amount of transactions, active addresses, all this kind of stuff is incredible. Like they're doing so well, and the price just sucks. and possibly they're a victim of their own success. They've done so well at reducing, the cost of transactions and all that kind of stuff that no one actually wants to hold the asset anymore, because you only need $10 of Ethereum and you're set for a year kind of thing. And I'm exaggerating, but it's kind of, I don't know. It's a sad situation to see that they're doing so well and eating so much shit every day.
Would we have stablecoins if it wasn't for Ethereum?
I can't imagine the concept of stablecoins would not be invented if not for Ethereum. Like that doesn't seem possible to me. And as everyone knows, we've got stablecoins on other. Like we had stablecoins on Bitcoin, right? USDT existed on the, what was it called? The colored. Is it colored coins? Did stablecoins?
Colored coins, yeah.
Colored coins was a sort of a vague attempt at tokens on Bitcoin, I think. The OmniChain. That's it, the OmniChain. So stablecoins have existed outside of Tether. Sorry, outside of Tether, definitely outside of Ethereum, and outside of layer 2s as well and EVM chains. Okay. But I don't know. It's a good question. I think it definitely would still exist. Would it be the same state it is in now?
Would have got there later, maybe.
Yeah, exactly. Ethereum, like back in the day when the ERC20 token standard was created, that really kicked off the altcoin kind of complex. So prior to that, we had a lot of proof of work altcoins, and you kind of you had this cool idea for a coin or a scam, and you made the coin, and people had to run computers and figure out hashes and whatever to mine on your blockchain. And that was a big ask, right? That's a big ask to sit there and go, okay, I need a whole bunch of people to make this network secure for this random coin that I've just invented, and it's not Bitcoin, and it doesn't have the properties of Bitcoin, but it's going to make you rich kind of thing. You'd really have to somehow get people involved. And then the ERC20 idea came along where you could sit a token on top of Ethereum and sort of piggyback off its security and all that kind of stuff. And this is back then, Ethereum was a proof of work coin as well. But that was fine because you didn't have to then sort of corral a bunch of people into mining a coin and trying to increase the security of the network. You could just sit there and use Ethereum security, and so it just made it so much easier to launch a coin and so much easier to launch a bunch of scams and all that kind of stuff. But that's kind of how stablecoins are bootstrapped as well. They could just quite easily sit on top of this thing, and all of the guys running the stablecoin had to worry about was how to keep the coin stable. They didn't have to sit there worrying about network security and all that kind of stuff and running a completely separate network that could have its own bugs and blah, blah, blah. They kind of could rely a bit on the maturity of the base layer.
There wasn't many charts in that whole discussion there, Nick.
I
promised people charts and you delivered nothing.
I've given you one so far. one's pretty good.
All right, well, let me introduce the rest of the topics for the day, and then you can time to crack into these charts and analogies. So this big theme for this week in the news, is let's call it the regulation sweep. There's been a number of stuffs happening. So we've seen the SEC clear the DeFi front, which has got some good talking points there, particularly around the broker-dealer registration. I think there's probably some relief for the whole DeFi community there. The White House, the stablecoin yield bans. Going to talk about that.
Yep.
The Clarity Act has stalled, but Loomis, Armstrong, and Garlinghouse are all signalling we're at max frustration. We're
Yeah.
so annoyed with each other. We're just like, whatever. We're
Just
we're
do it.
finally at the proper point to
Yeah.
bargain where everyone's so fed up.
Yeah.
It's bargaining time. You know what? I don't care anymore. I just want this done.
Mm.
That's where we're at. Hong Kong has issued its first 2 stablecoin licenses, and there's a bit of discontent over who got them.
Mm.
We're going to talk about that. And Dubai and Japan. Japan. Let's go with Japan first. Japan has classified crypto as a financial instrument, and that's going to kind of, I guess, bring crypto into the mainstream in Japan. And Japan has some interesting history with regulation, perhaps even coming a little bit out of their experience with the property bubble back in 1991. And Dubai releases its digital asset issuance guidance. Stay tuned for more regulations.
Can't wait to talk about that.
Can't wait to bring those charts out.
It's just flat.
Okay, so everyone's like, yeah, yay, that sounds awesome. Can't wait to talk about that. But we will talk about, potentially, there has been an article, someone suggesting that a well-known Bitcoiner may be Satoshi himself. It's a bit like Groundhog's Day, but, let's discuss it anyway.
Yeah.
Jared has some excellent imagery that we'll bring up. All
Okay,
right.
Where to first?
Where to first? Where would you like to go, Nick? It's you're the one on holidays.
All right. Well, not today. I'm getting paid today. Let's go with Morgan Stanley. That's the top of my list. Not the top of my list in importance, just the top of my list. By height. I thought this was kind of an interesting one. So at first glance, I was like, holy crap, this really surprised me. Morgan Stanley have done this, have launched a Bitcoin ETF, which in itself is boring. Like that happened 2 years ago or whatever, the whole ETF rush, and we had all these companies throwing ETFs at the wall and seeing what stuck. And obviously BlackRock was the big one. Those guys have like the big heavy hitters in the space, and to no one's surprise, they are
Dominating.
They're absolutely dominating in terms of assets under management. Their fee is something like, I think, 25 bips, 0.25 of a percent is their management fee. And there's all these other players in the space. So many Bitcoin ETFs out there. You're spoiled for choice, basically. And Morgan Stanley sort of come along here. Where are we? Q2 2026, and go, hey guys, we're going to release a Bitcoin ETF. And I was kind of like, yawn. They did one thing. They did do was make it the cheapest one out there. So they've launched it at 14 bips, 0.14%, which is kind of interesting. That's 1 bip below Grayscale's mini trust, which is the, prior to this, the cheapest. And it's about 11 bips below the BlackRock one. And now I think we spoke about this 2 weeks ago at the last moonshot. But what's interesting here is that the numbers that it's done so much. It's done so much volume that surprised me, because there's so much choice out there, and there has been for years. And these guys come along and go, all right, we'll do one, and they get 30 mil on the first day. Holy crap! And it's the biggest that they've ever done. So it's not like, normally they do like 100 mil, they've done 30 mil, but it's big in terms of Bitcoin. No, this is the biggest they've ever done, and it's a huge number, and it's 2 years late. How do they do this? If you ask, like when you sort of started looking into the details, the way I see it is they've really set this ETF up to succeed. They've done everything they can to make it succeed. So not only like they've got the name of Morgan Stanley, they've got 15,000 advisors or something out there that are pumping this thing, and they've made it the cheapest ETF that exists. It's a no-brainer. If you've been waiting for Morgan Stanley to get an ETF because you're already in that ecosystem, this is the easiest way to do it. If this didn't succeed, then I'd be worried. I'm less excited that it did succeed than I would be worried that it didn't succeed, if that makes sense. Just because they have really done everything they can to make this thing a real success. And it was a total success. I can see Jared's
queuing up
making
the microphone.
noises.
Do you think they were timing the bottom, or is this just pure happenstance?
Pure happenstance.
Yeah, I doubt it. The funny thing is, like with these kind of listings, they probably started working on this when it was, not even close to the bottom. They're probably at the top, right? Like they were like, holy crap, Bitcoin's going up forever. They listened to a bit of Sailor, and then they were like, crap, we better get a Bitcoin ETF, and then list at the bottom. I mean, as long as it doesn't turn out to be, what's that other group? Is it Goldman's? Who every time they open up a trading desk, Bitcoin just dumps forever. And then they're like, fuck it, and close the trading desk. And then Bitcoin's up only from there on. Like, it's happened like 3 times in a row. It's so funny. Anyway, like the Morgan Stanley thing, I think it's great. It shows real sort of they're doing this in good faith. If you ask me, they're not sitting there.
Legitimization.
Yeah, they're legitimizing the asset class, but they're doing it. They're really trying to make it win, and it totally did win. But they're not stopping here, right? They're going to launch a bunch of other non-Bitcoin ETFs as well. They're doing a bunch of tokenization stuff. They're getting into the space properly. And as we spoke about before, they haven't always been like negative to Bitcoin. They're not sort of sitting there and calling it rat poison. They were sort of one of the first to offer Bitcoin to their advisors. I think not through ETFs, obviously, but through some kind of derivative. So they've always been fairly forward thinking in the space, but they obviously are very cautious considering how long it took them to get this spot ETF out. But yeah, I think it's great news, and the fact that we're seeing this kind of volume in this kind of market, you can't be unhappy.
I think with all these new people coming online to push their ETF, you could take the devil's advocate approach here and say, well, look, it's just another product for them to sell, right? So I'm really kind of interested to see what first of all, the Morgan Stanley research is on this. I haven't seen it. I'm sure someone out there has read it, but it'll be interesting to see the house view going, okay, one of two things. They go, okay, we actually agree with this thing. We're actually pushing it because we like the asset, right? And that's important, right? Because behind that comes the research. They would never launch this thing without doing the research, without doing the due diligence, or out taking out the research to their advisors to go, okay, guys, we laughed at this thing, but we were wrong. And here's all the research and here's all the evidence as to why we think Bitcoin is this institutional grade asset that it's good in your client's portfolio. So that's the first thing. I guess I'd just like to know more about that, because you would assume to have all the pieces line up the way they did, all those boxes have been ticked. They've looked at it. They said, we like it. We think it belongs in the portfolio. It has a long-term view, which is going to be positive. There is the interest in them making money, of course, but there's also the interest in them growing their clients' wealth, so they continue to, have customers. So they want to do the right thing, by their customers. So I suspect that they all those things are lining up, which is again a legitimization, and it's just. But the big thing from I guess access point of view is the distribution channel that these guys have. Morgan Stanley, Goldman's, whoever, right? Whoever's pushing these products, they bring with them a gated distribution channel. And what I mean by gated, even in Australia, like if you're part of an advisor network, they can really only recommend or produce or give you investments into a limited range of investments. Crypto has always fallen out of that. The ETFs are a way to kind of get into that pot, if that makes sense. So I think that's probably the two ways I would look at it. First of all, legitimization from an institutional viewpoint, and the second thing is distribution. And a lot of other banks, like a lot of other banks, we're looking at the Morgan Stanley's research and going, you know what, maybe we were wrong about it too. And that influences other people's views.
This is like the snowball effect, right? The more that get involved, the more sort of everyone else is like, the tide is changing, tide is turning. So I mean, this is interesting, like, because a lot of these investment banks will come out with their own predictions for price as well. So I wonder if Morgan Stanley, in their research, like you'd think they would do that, right? These guys would, maybe they don't publish it, but they would have their metrics and go, this is where we think it's going to get to because of X, Y, Z. It would be interesting to see where they think it's going.
Now, I promised you some analogies. So the most obvious one here is to the gold ETFs. A quick bit of trivia. When did the gold ETFs first start coming out?
I must say like year 2002 or something like that.
I actually would have thought, I guess ETFs have been around, but yes, 2004.
2004.
Now, the second thing, so that was actually a bit later. I don't know why.
I remember when I learnt that, and my first guess before I learnt that, it would have been like, I don't know, 1973 or something. You know what I mean? I would have guessed in like the 70s or the 80s maybe. Yeah, it surprised me. I remember when I first learnt that. I was like, holy crap.
Because gold was obviously an investable asset before that. And I don't know what the view was at an institutional level, but that was the first time, I guess, gold became institutionally accessible. Well, so accessible for the masses.
Yeah.
As in 2004. Now, what did gold do over the next 7 years?
Bull run, baby.
20x'd.
Yeah. Yeah, I remember that was a big narrative when the ETFs first came in for Bitcoin a couple of years ago, where everyone was sort of likening it to gold and going, okay, do you see what's happening here? Like, there's going to be dips for buying, and you're going to be scared sometimes and happy some other times. But the more you zoom out, the more you're like, this thing is going one direction only, kind of thing. Yeah, and what's gold done in the last? Like, man, gold just doesn't stop. Why did I become a crypto guy and not a metals guy?
Well, it depends.
I should have listened to the color of my shirt.
It's crazy. So there's an arms race. You could argue now because there's also so Morgan Stanley's of the world, BlackRock, they're all fighting for distribution of their product, right? They all want their, the Big Mac versus the Whopper, right? Who's gonna win the shelf space war? Who gets the most distribution? How do you say that my ETF is better than your ETF if you're just competing on fees or whatever it is, right? They've got to push it. They've got to push it, don't they?
100%. And I just want to know separately, is that Big Mac Whopper analogy part of your research?
You know,
Or was
that wasn't.
was that off the cuff?
That was off the cuff.
Oh man, you are on fire.
I promised you analogies. That was not my analogy. My analogy was the gold ETFs, but I brought the Big Mac Whopper one with you.
Yeah, wow.
Feel free to throw in your own if you'd like.
What a pivot. No, I can't compete.
So
This is a bad analogy though, if you ask me, because you know how everyone analogizes poor times with working at McDonald's and flipping burgers. So we've got to be careful.
Michael Saylor is people have adopted the meme though. People adopt the meme and they embrace it. You know what I mean? So as soon as the market goes back, even Michael Saylor's like back to work and he'll be putting on his.
That's the best part about bear markets is the memes. You can't they're unbeatable. It's sort of, I almost look forward to it in a way, assuming I'm positioned correctly, which I never am.
Yeah. Well, oh geez, you know what? I almost referenced your favorite quant analysis, Raoul Paul.
Oh, I thought you were going to say Ted Pillows.
No, going irresponsibly long during the.
Yes. Raoul
Don't
Paul.
go. All right, now it's time for you to. Surely we have some charts. We've got no charts in that one. I've misled the audience here.
I mean, let's be real. I think I have 2 charts. It's not like I'm charting every single topic.
I've oversold the charts.
You really have. It's almost like I'm trying to figure an analogy here.
Well, I'm going to throw this one to you, but we can pull some analogies out. We can definitely pull analogies out of this one, and that's the SEC clearing the way for DeFi.
DeFi.
That's right.
Yeah. So this is.
Should I start with an analogy?
Oh, please.
Well, what's going on here?
Help me understand this.
Well, the analogy is a bit like the SEC has come out and clarified. So the one
clarified.
Clarified, I guess, the role of DeFi in the overall ecosystem, and it's analogous to, for example, clarifying that Bloomberg Terminal or Refinitiv don't need to be a broker-dealer license. What's the term here I used?
What?
Skynet's back. Well, the DeFi platforms, they're the interface, not the counterparty, right?
Yes.
So they're the plumbing of the markets, and the plumbing of the market doesn't necessarily need to be a broker-dealer. You're just the connections.
Okay, I see where you're going with that. I think that's a bit laboured. Like, also, no offense. Like, I appreciate the effort.
Terrible idea.
Just like rub it off.
Do not do that again.
Yeah.
All right.
No,
Maybe
yeah.
don't try that again.
I think DeFi these days is much more like it isn't just a terminal, right? It used to be just a terminal, but the stuff you do these days, especially now that AI is getting involved in these things, like they are deep and complex and integrated, and I don't think it's as simple as talking about it like a Bloomberg terminal. Having said that, I haven't used Bloomberg terminal in a long time, so maybe Bloomberg terminal is, moving with the times. I doubt it.
We've scratched that analogy off the list. Let's start again.
Yeah. Anyway, so what this story is about is Skynet says SEC giving permission to use permissionless networks, wallets and interfaces. Thanks. Yeah, that's a fair point. So they're kind of allowing us to do what we could already do. But the thing is that this ruling is less about the people using these DeFi interfaces and more about the people running the DeFi interfaces. So like Uniswap and the Uniswap DAO or whatever is an example. And what they're basically saying is, look, there was a lot of uncertainty especially with how the Clarity Act is dealing with DeFi and these DeFi interfaces, like the websites that allow you to connect your MetaMask wallet and whatever. And basically saying, look, these originally the threat was that DeFi was going to be treated like a broker-dealer, which means you have to KYC all of your connectors, all the people connecting into you, which is, kind of defeats the purpose of it being decentralized and anonymous and all that kind of stuff. And you have to, pay taxes, and you have to, I don't know, there's all these sort of things that it would make you do, and it becomes super onerous and essentially pointless. And what would happen is it would just mean that any of these DeFi guys would be like, okay, this sucks. We're not doing this in America anymore. We're just going to do it somewhere else because, it's infinitely easier, and this law doesn't actually stop any of it happening, and it doesn't stop the American people, which is this is the SEC. We're talking about America here. It doesn't stop them from actually connecting. It doesn't protect them. Like the SEC is there to protect, the constituents of the country, right? And it doesn't protect anyone because they're just going to go offshore. So it was a stupid rule to start with, and the SEC basically come out and said, which doesn't surprise me at all because the SEC is so pro crypto at the moment. It's interesting to watch the complete 180 they've done. They basically said, okay, if a DeFi for a DeFi protocol, if the users must be able to customize their own trade settings, the platform cannot push users towards a specific trade, so can't induce people to trade. The fees must be fixed and transparent. No control over how orders are routed, so the DeFi platform can't force the order routing down a specific path. Full disclosure of conflicts of interest, fees, and how the software works. So basically, it just needs to be transparent. And no holding of user funds at any point, which is how most of these platforms work. That's just all, it uses your MetaMask wallet to perform the trades. The money, sure, gets routed through a smart contract at some point, but it's never sort of held long term by the platform. So it's basically saying, any of these normal DeFi platforms won't get hit by this broker trader rule. Having said all of that, the SEC haven't come out with a ruling about this, which is, I think, the key point here. All they've done is said, look, this is just guidance on our thinking, on how we're thinking about this whole thing. So if you follow this guidance, we're probably not going to come after you. But this isn't a ruling, so you can't hold it up in the court of law and say, hey, I was just following the rules. It's not actually a rule.
Sorry,
go on.
a quick question. They say fixed fees. With a lot of DeFi, those fees aren't fixed, and they're not even deterministic. So they will be a point-in-time measurement, essentially.
So what they're talking about, I think what you're talking about is like a gas fee.
Yep.
So that's not a fee charged by the DeFi platform. That's a fee charged by the network, which is unrelated. So what this is talking about is and I don't know the fees these days, but Uniswap used to charge, I think, 10 bips or something per trade. So you'd pay your network fee, and on top of that, you would pay 10 bips to Uniswap. Uniswap would do different things with those fees. Usually it'd just go into the DAO Treasury. Maybe they'd use it to buy back the Uniswap token, for example. They do all sorts of different things, but that fee goes to them. The network fee goes to the validators or the miners or whatever. Yeah, so they just want the fee to be fixed in that sense. They don't want it sitting there going, for this user you're paying 1%, but for this user you're paying 0.01%, and then they point at the 0.01% user and go, look how good this is, and then trick people into trading. Yeah. They're just trying to make it really clean, simple. They don't want any argy-bargy. Yeah. Any other questions?
No.
Any other analogies, maybe?
No, not on that one. I didn't do so well on that one.
Yeah,
so I'm going to just go. Now that I've announced it's not so quiet, I'm just going to change the topic. The stablecoin yield, Clarity Act. All right, so we've been talking about this for a while. A bit of context.
Long time.
It's basically the banking lobby says you can do all your fancy crypto stuff, but the one thing you guys can't do is offer yield because that will take away deposits from us. We don't want that.
Yes.
So no yield for you, bad luck. We'll keep the yield. Now, there has been some evidence, well, at least some research has come out and suggested that actually, no, that's not the case. The amount of deposits that would leave the traditional banking system for, big, yield in crypto is not, systemic, not doesn't pose a systemic threat, and in fact, overall produces a net savings for the customer.
Yes.
Is that fair to say? That's not an analogy, that's just introduction. Now, please, do what you do best.
So what's happened here is the CEA, the Council for Economic Advisors, which is this White House commissioned group of really smart economists who do a bunch of research constantly for the White House and just sort of give them positions on what's happening in the world of economics. They've come out with this paper that says, look, guys, if we were to ban yield on stablecoins right now, on the entire stablecoin sort of complex, the only increase to banks' lending capacity would be $2.1 billion, which is something like 0.02%. It's a fraction of a fraction kind of thing. It's almost nothing. And so they're basically positioning this as a pointless exercise. They're like, why bother trying to stop this yield thing? Why are you guys getting so uptight about it? it's not going to actually make your lives that much better. You're not going to. It's not going to be this crazy run on deposits. And even if deposits do move over, due to all the rules and safeguarding, and I don't know the terminology, but there's a bunch of I can't remember the wording for it, but there's a bunch of reasons why the $300 billion that's currently in stablecoins only results in $2.1 billion of extra lending capacity to the banks. The banks are trying to argue that with this extra lending capacity, they can reduce the friction, the cost of lending, cost of borrowing for customers. But then the CEA, the Economic Council, basically said, the Council of Economic Advisors said, yeah, that's fine, but the fact is the amount of yields that people lose, the amount of money people save from these cheaper loans because you've got more money to lend, minus the amount of money that they lose from not having that yield anymore, is $800 million. So people are actually worse off in this situation. This is the argument they're making. I'm just kind of presenting it as it is. I've sort of had a bit of a deeper look, and I'm not an economic expert, but it doesn't seem to add up to me. So what they've basically done is they've said, in the current market, with the current rules where everything is very uncertain around yield, excuse me, in the current status quo, if we were to drop yield altogether, you'll get an extra $2.1 billion worth of lending capacity. But the fact is, if they were to create a ruling like this Clarity Act that said yield is okay, the market's not going to sit there at $300 billion of people's money in stablecoins. It's going to balloon. It's going to be up only for a while, right? So it seems like a poor comparison, an incomplete comparison to go, yeah, if you stopped yield right now, here's how much extra you get, versus the reality of the situation, which is if we were to enable yield, if we were to allow yield, we were to green tick this thing, then what kind of, how much money is going to go into yield, and then figure out what the cost to banks is. Now, I'm not for I'm crypto guy, and I want the banks to lose. Obviously, I hate banks. Banks only cause problems, but I think this isn't quite a fair comparison.
Yeah,
Well, you hear what I'm saying?
Yeah, I do, because obviously they're marking it at a point in time as to say, hey, no, nothing will change.
Yeah.
Clearly, the knock-on impacts will change. Now, this situation is not unprecedented. We know the banks have lobbied against, fintechs in the past. When I say fintechs, I guess, anyone who might have challenged their incumbency, and we had back in the early 70s. So there was a regulation queue which actually capped how much banks' interest they could sort of offer.
Right.
So interest rates being capped or whatever back in the 70s. Fidelity went, you know what, we got a great idea. And they started introducing the first money market funds as a way to get around some of those regulations, so they could attract more deposits by saying, jump in our money market funds and you can get a better yield, blah, blah, blah. And the banks didn't like that either. They lobbied against it. They hated it. So they lobbied against that. They, interesting, in that situation, they lost too. But it's the same.
Who lost?
The banks.
The banks lost, yeah.
Yeah, of course, money market funds flourished. And it was a way, that was some, again, I guess it's very analogous to what we're seeing now, is the banks would understandably lobby. It's not in their interest to have competition.
No, of course not, yeah. But I think the point you brought up earlier is also interesting about how there's this fatigue in the industry at the moment with the amount of people going, we're trying to get this Clarity Act done. The crypto industry participants are saying, it's not good enough. The banking guys are not letting, they're not budging at all from their position on no yield. It really, to me, it sort of depends on who's got more to lose. So do the banks care if clarity doesn't get passed? Crypto guys obviously do, because once we get literal clarity from this clarity bill, that's going to take, and I actually think that the current market, so we kind of skipped out a little bit on general market sentiment. I feel like you did mention that prices have been up only, well, not up only, but we've been enjoying some green candles recently. Why has that been? It's sort of thanks, Jared. The last sort of 24 hours or so, we've kind of, I don't know, we've gone from about 70k to 74k or something. It's pretty good. Why is that happening when the war continues? Well, I think this is probably one of the reasons, is that people think, okay, this clarity thing is finally going to get done. And that's sort of, people have probably been playing a lot of wait and see, without having, we've got the Genius Act, which came in a while ago. We really need this Clarity Act as like the it's the two sides of the same coin almost. Like we need this other side, and then people will have the clarity to be able to invest in the space and whatnot. And I think people are starting to front run the fact that they think clarity is going to get done.
Well, Barron has been on the phone to his broker, and he knows that laws coming through. Better go and buy my bags. Fill my boots.
Time to long
Pack
our
the moon
longs.
bags.
First there's going to be a dump, obviously. That's what Trump does. We'll do a quick dump. He'll pack those bags, and then he'll launch for success. Yeah, so I think what to me, what the question is here, who's got more to lose? Who cares about this more? I don't know what kind of pressures the banking guys are under, but to me it seems clear that the crypto guys care more about this. So if anyone's going to give in just to get this done, as Cynthia Loomis and old mate David Sachs, the old crypto czar, said, if this doesn't get done sort of now before these primaries, it's not going to happen until for another 4 years. So who's going to give in? To me, it seems like the crypto guys would be the ones, if I had to guess, would be the ones to give in. What does that mean for our yields? Well, for the USA yield, I suppose, which is going to play out in the rest of the world a lot. To me, I would think that they're not going to get it. I don't know. I don't know. I've got zero insider information, but why would someone's got to give in? I can't imagine the banks going, oh gosh, we better get this crypto deal done. Why would they give a shit?
That's true. It's a good point. It's a bit like that negotiation when you're always that kid that you had to negotiate with, and it didn't matter what your arguments were. It didn't even matter what they want. They just go, nah.
Yeah.
Nah.
Yep.
And they just wouldn't accept your view. They're just like, nah, until you give up.
Yeah.
Nah.
And they didn't even win in the end. But all they did is get you to not win. Yeah.
Correct. It's like it's a bit like a game of Jenga.
It's a good
no winner, just one loser. I just made that up just then. What do you think of that one?
Analogies have analogies.
It's incredible. Yeah. You're on
roll.
fire.
All right. Well, while we're deep into the licensing bit, because I knew before we went on, I said, Nick, it's a bit of a slow week, just a lot of regulation stuff. You're like, what are you talking about? I love this stuff.
Nice. We've got a lot of like quantum talk to come up. We've got some Satoshi stuff. We've got some good stuff here.
Okay. Well,
but we can continue on the regulation path if you want.
Let's get the regulation piece done. We won't talk about too much about the Japanese stuff, or maybe we can skip over the stuff with Vara.
Regulation videos from last week are the only ones that didn't reach triple figures.
Sticking with our winning formula then.
Yeah.
Try and test it's true of boring people into submission. You want some good stuff? No.
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 Very good.
It'd be entertaining this week. Come and ask me. No.
Don't want to.
We suck. You know what? I was going to talk about Hong Kong stablecoin licenses. Because this, this is the banks just went, nah. Actually, what happened was, so in Hong Kong, they were like, finally, you can issue stablecoins.
Yep.
But the only people who got the license were big banks.
Yeah, well, the licensing, the regulator said nah to everyone else, basically.
Now, you know what, though? I don't mind this. I'm not. And I dug in a little bit in the detail on this, which is, this only really relates to Hong Kong dollar referenced stablecoins, right? So if you want to issue a Hong Kong dollar referenced stablecoin, and it kind of makes sense, you need to be a licensed entity and you need to have sufficient fiat reserves and all this kind of stuff. So it makes sense that like a bank or something like this, and again, this is not without precedence. There are a lot of regulatory regimes that once they come through, they're kind of, I don't know if seeding is the right word, but they kind of like handpick the first people very carefully, right? To make sure they don't just go, okay, great, here's a bunch of lunatics.
There's a good analogy here with Independent Reserve in Singapore, I think.
You know what? I didn't even think of that. Yeah. But Singapore was a great example. But they are very careful with who they give it to start for obvious reasons. So, okay, here's the question for you, Nick. The MAS in Singapore, since we're talking about that, do you know when it was started?
No.
Not 1971, I believe.
71.
1971.
You were close.
So, under Lee Kuan Yew, the Singaporeans, they wanted to become they made a very conscious decision to become a trading hub of Asia, which they've done exceedingly well. And yes, they wanted to be very careful about who they allowed access to, and the quality matters.
And then fast forward, I'm going to say 50 years. 47 years, and Independent Reserve is the first crypto exchange to be licensed by the MAS.
Correct. So, the types of people. So, the first person to get a license of any type in Singapore, I believe, was Bank of America in 1968, which was issued by the government, pre-MAS. They
Yeah,
were
wow.
given approval here, as it says on my notes, for the first Asian dollar deposit accounts. There you go.
Yeah, interesting. And kind of analogous again to our situation where, we're an external non-Singapore company
Hmm.
and the first to get the license. You'd think it would be the Bank of Singapore would be the first one
No?
to get it, but the Bank of America.
Yeah, they're very careful, very, very cautious, which is a good thing. So I think this is the same thing we're seeing across the board here. The people, understandably, they need to be careful about who they're letting into the market because that sets the tone then for the remaining of the participants that are going to join afterwards. Should we,
Oh, did you want to continue on the Japan stuff?
No, not really.
Yeah, okay. Fair enough.
Because
I
we
mean-
just discussed that no one really likes the regulation chat.
Yeah, okay. Yeah,
Do you want to skip it?
No, it's fine. It's fine.
We could jump straight into something that I don't care about, which is quantum computing.
All
How would you like that? You could swap what the audience doesn't like for what I don't like.
Yeah.
And then you're only boring me.
And you don't matter, so that's fine.
Well, as we know, your what is BIP 360 got what, 47 views? 49, sorry, my mistake. Anyway, you tell us about quantum computing, Nick.
Sure. So the big news this week on quantum computing is some guy, and I actually didn't write his name down. Do you have the notes here?
Oh,
I should probably reference.
no, I wrote my own notes. I
It
didn't.
was a difficult name to pronounce.
The dude from
Abby.
Starkware, right?
Yeah, from Starkware Labs.
Someone Levy.
Here we go.
Abivhu Levy.
Yeah. I'm glad I didn't try and pronounce that. Anyway, this guy from Starkware, who's Starkware is like this company that does these, builds this technology around Stark proofs. It's this sort of mathematical concept. This guy has figured out a way to make quantum resistant transactions happen on Bitcoin. So quantum's this big thing for those who haven't been paying attention. Quantum computers appear to be just around the corner. The problem with that is that Bitcoin is not quantum safe. So when you send a Bitcoin transaction, your public key is exposed on the network until the transaction is locked in. Well, it's exposed after that as well, but it's exposed, and there's a period of time when your transaction hasn't been mined yet that it's potentially vulnerable for someone else to grab it and reuse it and send your Bitcoin to their own wallet. What happens is quantum computers can potentially reverse engineer public keys. So a public key going to a private key is kind of the whole core of how Bitcoin and a lot of cryptography works. You have a public key and a private key. If you own the private key, you can send. You can prove that you own this key. If you have the public key, people can send to your public key. So this guy's basically figured out a way to make a quantum resistant transaction. The problem is, there's many problems with this, and I actually don't like this thing at all, even though it's sort of moving in the right direction. The problem is, one, it costs something like 5 hours and $150 or $100 or something worth of compute power to create the transaction in the first place. So it's very expensive and it takes a long time. Then you can't just submit it to the mempool. You have to submit it directly to a miner. So you have to sort of somehow figure out how to do that because it's a non-standard transaction. And because of the way it's built, it's a very big transaction. So it costs you a lot to do this in the first place. So it's expensive, it's difficult to do. And it sort of gives this, my main issue with this whole thing is it's very clever engineering, don't get me wrong, but it's the main issue with this whole thing is the way it gives like a false sense of security. So people are sort of saying things like, well, we don't have to do any quantum, resistant stuff on Bitcoin anymore because we've got this thing now. We've got, what does it call it? QSB, quantum safe something. I can't remember what it is, but they called it, yeah. So I don't like it because it's potentially taking away the focus on getting quantum stuff solved properly. Let's see, what else did I write on that? Yeah, so there's also other, it's kind of revealing in a way. So the people who are, we're seeing a lot of people come out, say, like the people who are on the side of this doesn't, quantum is not a problem, coming out and pointing at this thing and going, hey, see, I told you, we don't need to worry about it. But that's revealing in itself because if they truly believed we didn't need to do anything, they wouldn't be pointing at this solution and saying,
well, yeah,
they would be ignoring the solution because we don't need it in the first place. But now they're going, hey, check it out. We actually don't need it. It's like, no, hang on, you can't have it both ways.
Reinforcing their own laziness.
Yeah, it's not ideal. And the other thing is, and this is kind of my main worry, is it doesn't solve any of the Satoshi era coins. So back in the day, there's a P2SK, I think it is, address scheme where the public key was visible directly on the blockchain, even if you haven't sent from that address, which means that anyone getting hold of that public key can potentially reverse it with quantum computing once quantum computing gets to a sufficient kind of ability. And this thing doesn't solve that at all. So we've still got this issue of something like 1.7 million coins of Satoshi era that are just sitting there ripe for the taking. And then there's also another, I can't remember the numbers, like 5 million coins that have got address reuse on them, which means that the public key is visible because they've been sent from but not fully emptied. And so there's like a lot of coins. There's like almost 7 million coins out there that we have to solve somehow. Yes, we need to solve the other side of it, which is, what BIP360 does or helps with, in that, when you're sending coins out of an address, you don't want it to be someone to be able to capture that and quickly send their own transaction and beat you to it. But also there's a whole bunch of, P2PK is the address scheme. Yeah, so we need to solve for those ones, that's the thing that kind of, this is a two-pronged attack that we need to have. Anyway.
Interesting.
Done.
So with quantum computing, we always talk about Bitcoin, and it seems to be, maybe because we're just live in a universe where everyone cares about Bitcoin, but what about the Swift network and stuff? Like, if you have access to quantum computing, we'd be like, sweet, I'm just going to hijack every dollar ever.
Yeah. I guess the problem with trying to analogize this quantum Bitcoin computing thing with quantum other things is that nothing else is decentralized like Bitcoin is. So even other cryptos like Ethereum, Solana, whatever, they're much less decentralized. They've got, foundations or development houses that really control the direction of the coin or whatever it is. And in the case of Swift, yes, that is something, an issue that they would need to think about. A lot of, whenever you see HTTPS in your browser, that's using what's called SSL, which is like a secure layer something or other. SSL, secure socket layer, I think it is. And that uses public-private key technology, which is potentially vulnerable to these, to crypto quantum computing. Sorry. But the thing is that stuff people can just fix that, right?
I guess there's things that can be mandated because there's a central authority to be like, hey, we can fix it, we'll work out a solution, we're doing it.
Exactly. And there's like a top-down approach. It's a centralized sort of like a centralized organization that looks to fix it. Google have come out and said that we need to be quantum safe by 2030, I think it is. So that's just a really good example of a top-down approach where like the company is saying, look, we don't want people being able to hack in and read other people's emails, like as a shitty example. Fix this stuff. Like engineers, this is now a priority for you to have fixed by 2030. Whereas in the Bitcoin world, there is no, like, yes, you have this group called Bitcoin Core, which everyone kind of points out all the time to say, why is Bitcoin Core? Why is Core not doing anything? But Bitcoin Core can do whatever they want. The problem is people then have to download their software and use it. And that's the real issue, right? Anyone can build a Bitcoin client that sits there and reads the network and becomes a node and whatever. But how do you make everyone download it and agree to it? And if, especially with the way things are going, you need what's called a soft fork in the Bitcoin network at least. And soft fork requires everyone, it doesn't break the network if it doesn't work, but it just means if not more than 50% move over to the new thing, then you got this weird split in the network potentially, or not split because that's a hard fork, but it just becomes a difficult situation because there is no control. Like Google can right now go, you know what, we're changing the color of the Google logo, and it just happens. It's not like I can go, well, I'm just not going to download that one. It's like, no, you don't get a choice. It just happens. But with Bitcoin, you don't have that luxury. And it is, it's a double-edged sword. Because it doesn't exist, then you get decentralization and the whole thing about how cool Bitcoin is. And there's a lot of positives to this, but it does make organizing around an idea very difficult. And, the last soft fork we had in Bitcoin was Taproot, which was 2022, I'm going to say. Like, it was years ago. It's so difficult to do. Like, in the olden times, soft forks happened all the time. They were, like, fixing stuff and making upgrades and doing this. And there was all these, Bitcoin improvement proposals that were out there and, things are happening. And it's just becoming harder and harder and harder to get changes. A lot of people, before the quantum became a thing, a lot of people were sort of talking about how it's probably actually too hard now. We could never get consensus in the network to make any kind of change. Taproot was kind of, I don't know, there's a couple of people who really championed it and a bunch of devs said, this is the right thing to do, and it managed to get through, even though I arguably wasn't an amazing update. Like you look at the amount of people that are actually using Taproot, it's like nothing. But now we've hit into this quantum sort of wall, which people knew
Surely
was
everyone
coming.
can agree that being
We
quantum
need to agree,
resistant
like-
is a good thing.
And the craziest thing to me is that Saylor is very against change. He wants the Bitcoin protocol to ossify. He doesn't believe, and he's the guy who's got the most to lose, right? Literally, he's got so much Bitcoin. I don't understand how he can take this position when every day we see these new things coming out about how quantum's getting closer and closer.
Well, maybe we just have to do the same thing we do with Clarity, wait until there's max frustration.
But that's the problem. The max frustration is when people's coins are getting stolen. It's like it's too late.
Do you think the quantum's arms race feels a little bit like the Y2K phenomena, in that when we do finally get quantum, it'll be on both sides of the desk. So you'll have quantum people trying to hack stuff, but you'll also have quantum cybersecurity.
Nice analogy, nice attempt at an analogy. I don't think that's quite right because, like, yes, but we need to do it now. The problem with the way we solve quantum in Bitcoin, because it's this, as I said before, because it's this decentralized network, you can't force people to do anything. So for the most part, what we're going to need is people to actually upgrade their wallets on their computers. How do you force someone to do that? We don't have an app store that forces a download to people. So if they don't upgrade, then they're going to be at risk.
Well, I know with other coins, they might have a certain scenario where nodes won't process transactions from a specific version and lower.
Yeah, so that's a soft fork. Like you're forking the code at that point, where nodes start rejecting. Well, that's a hard fork actually. If nodes reject, you get this chain split where some nodes accept and some nodes reject, and suddenly, you've got two different blockchains now. And if we have to have a hard fork, we have to have a hard fork. I feel like people just need to understand like the severity of what can happen here, especially with sending crypto and having the quantum risk for sending is one thing, but all of those at-risk coins, like that is a big deal. 7 million coins, a third of the supply. If someone starts mucking around with that, Bitcoin's going, I don't want to be doomer, but like we're going to see some seriously like 99% drops in Bitcoin kind of thing. Like
Skynet agrees with you as well. He says quantum computers provide zero defense. It's all about offense.
Exactly. Yeah. So I mean, yeah. What I think we could potentially sort of lean on here is AI, right? AI can sort of help us come up with potentially technical solutions to this. But the real problem isn't so much technical. It definitely is technical, but the real problem here is the social side of it. So we need to get everyone involved. We need to get people understanding and agreeing that this is a problem, and nodes voting in favor of getting stuff done. Skynet says Ledger did a presentation that showed none of their hardware is good enough to run post-quantum signatures. Yeah, there we go. So as I say, this is post-quantum signatures. They're making assumptions on how it would be fixed. So maybe someone clever, maybe AI comes with a better way to do it that can be run on ledgers. I don't know. But yeah, it's going to be a massive
to quantum.
it's going to be a massive project to do this upgrade, and we need to start now. Even if quantum doesn't happen, we want to be able to have a way to solve it. So if it does, we're like, haha, we've already solved you. Anyway, that's the doomerism for this week. I'm still definitely feeling positive about it. There's a lot more movement in the space than there used to be. BIP 360 seems to be getting some traction. These Starkware guys are coming up with cool other ways of doing it. Even though I don't like the fact that it's sort of potentially taking the focus off the real solutions, it's still great progress and like in the right direction. I'm glad we're thinking about these kind of things. Yeah. Bitcoin quantum resistance with no soft fork. I don't like it. Sorry.
Done?
You can wake up again
now
if you
done
want. Hope your nap was restorative.
There wasn't restorative nap. I'm glad we've discussed and solved problems that aren't yet real.
Yeah.
Here we go. Question is real. Is it correct to say that the AFSL requirements on exchanges will increase costs and may cause delisting of tokens as it is not financially viable? Well, there's two parts to that question. Will it increase costs? Absolutely. May cause delistings because it's not financially viable. I wouldn't say necessarily because it's not financially viable, but maybe because as part of their regime, they will not allow certain tokens that ASIC believe to be securities. So, absolutely. So this is just me talking out on my own. I don't know if this is definitely not a house view, but I suspect that generally whenever you have a licensing, there's going to be extra requirements. Your business goes through additional, I guess, your business has additional requirements to meet those standards, right? Internal processes and, reporting and responsible managers, all this type of stuff. There is an absolutely additional cost with having an AFSL. That's true of, I guess, there's never been a kind, I think, in ever when you've had to do more stuff and required less costs. Maybe, I don't know. Anyway, but I guess the big question will be around things like the listing of stablecoins and whether ASIC view that to be, a thing or not. But we'll have to wait and see. We'll have to still wait and see because that's still very much in the air.
Yeah. So the way we've kind of run our shop for a long, long time, forever, as far as I'm aware, is to sort of do a whole bunch of, we do more than what's required when we list a new coin. So just to answer, like, does it increase the cost of listing coins? Maybe there'll be stuff in this regulation that, does require certain aspects or new stuff that has to be done, as part of the legislation for listing a new coin. But we already do a lot of that stuff as far as I can tell. Like Independent Reserve goes to extra lengths to be, as compliant as possible. And we treat, our processes are under the assumption that we're, a licensed entity. We pretend that we already are licensed and we do what we can, what we think is reasonable. So for us, it's not going to increase the cost. I don't think, like marginally, meaningfully for listing tokens. But as you say, it may force our hands for other reasons that aren't cost related. Yeah.
Yeah, and just I guess I would suspect, and I think I don't know if Amy Rose from Decia is back online watching us today, but I think she made a comment last fortnight that we had something like 400 DCEs in Australia. Most of those are probably not active, and a lot of people, just because it was actually quite simple to get a DCE registration, just kind of did it for the sake of maybe having it one day. But of the actual DCEs, so digital currency exchanges that are sort of up and operating and marketing, I do suspect that this will probably lead to a closure of some of the smaller ones who just go, you know what, it was tough as it was being a small operator in a relatively small market, and these additional compliance costs are just not worth it. So I think, that's probably speaks to the nature of it.
I think especially those smaller ones that haven't been running in the best way that they could might look at what's required of them and go, holy shit, like we're not going to turn a profit in this new world.
Correct, and you need custody and all this kind of stuff. Yeah. Hey, quick shout out to Renee Louise, made a mess of that, and Jeffrey Matthews for hanging around on TikTok and watching us the whole episode. Thank you we can see you guys, by the way. Yeah. We know. It's on our list of all the people who are watching. Thanks for stopping by, guys. All right, so we're going to move on to something that the audience may want, which isn't quantum computing or regulation, despite us spending all the time on those things, which is there's a story that came out. The two we're going to talk about. One is maybe we found Satoshi Nakamoto. Okay. Or at least someone claims they found who he is. But once again, there is plenty of conjecture. And the second one is there's a story that came out suggesting that Iran is avoiding sanctions by receiving money by people having to pay the tolls in crypto. More conjecture. Which one do you want to do first?
Iran.
Well, supposedly I forgot about the oil toll.
Yeah, there's a few consistency issues with this photo. Why has that guy got a wooden gun? Anyway.
So the story goes that there was a representative from the Iran regime that said, we have been basically saying there's a toll, effectively $1 per barrel, and when you come by, you need to send it to us in Bitcoin, right? Okay, because of the unsensible, unstoppable nature of it. TRM Labs then came out and said, hang on, no, there's nothing to suggest that. Well, we can't see any on-chain activity of this, of which someone probably pointed out, I think it was Udi or one of your mates, turned around and said, well, maybe they just confused Bitcoin with crypto in general.
Yeah. Have you checked every single chain?
Have you checked everything? Yeah. Potentially. To which I guess that's the point of conjecture, which Iran then replied by saying, yeah, of course it's true. Look, here's a Lego image of us receiving something.
I've just had
I love this though. The
Yeah.
shape, the ship. I don't know how much oil going to get through when it's the size of half a Lego man. And look, China's paying in Australian dollar coins, which then become US dollar notes.
Yeah, the guy's holding in US. He's selling immediately. No wonder our prices have been depressed. You know what? I've just had a thought though. Imagine like Iran take all of this Bitcoin as payment, and then the US build a big quantum computer and steal it. Like that could be the play. That's what's happening. We're watching it before. Yeah, I'm very sus on this story as well. There's no official. The guy who wrote this article has no actual sources. Like he's not from the Iranian government. And then I'm just going to read out what it says here. So the author Hamid Hosseini, which is the guy who wrote about this thing, says that once the ships send an email and Iran completes its assessment, the vessels are given a few seconds to pay in Bitcoin.
Well, you need a few minutes. 10 minutes.
Ensuring they can't be traced. Like this,
None of that
how many
makes
times
sense.
did I do this? There's like 5 different what the fucks in this message that this guy wrote. None of it makes sense.
Sorry, my Bitcoin bounced.
Yeah, and a few seconds, like, yeah, none of this is right. Anyway, $1 per barrel, huh?
They sent an email though.
Yeah, they send an email. The ship sends an email, and then the Iranians assess it. Like, Now, and they're like, hang on, it's been a few seconds. Where's my Bitcoin? Like, come on. None of anyway. This guy sounds like he's talking out his ass. I don't know the details. Obviously, $1 per barrel though. That's kind of interesting. So, I had a look. Most ships seem to have about between 800,000 and 3 million barrels on board, depending on the class of ship and all that kind of stuff. So that's a decent sort of
3 million barrels.
That's
Yeah.
1% though, isn't it?
Yeah, about 1% is what you're sort of looking at, because the cost of oil right now is about, I think, $97, something like that. $1 per barrel seems like it doesn't seem extortionist. 1%, it's not crazy. It's not like they're charging, some 20% or something ridiculous. But yeah, this seems a bit funny. I don't believe any of it, to be honest, but we'll see. Well, will we? I don't know.
Well, speaking of unbelievable things, Adam Back being Satoshi, that I found even more unbelievable. Because Adam Back, who's a very prominent, I guess, Bitcoin developer.
There he is, apparently.
There he is.
There's someone in the likeness of Adam Back.
This story is crazy that they like come out and said, yeah, some guy who, well, you can run through the details, but basically said, yeah, this guy's him, yeah, because he was hanging around at the time.
Yeah, there's a lot of things I don't like about this story. So the guy who released it was John Carreyrou, I think. He's the guy who broke the Pentagon. He's the guy who broke the Theranos thing. So called out Theranos as a scam and did that whole thing. So he's got a bunch of I think he's riding high on his Theranos thing and going like, who else can I expose? And he's decided to expose the Satoshi Nakamoto and come out with this hey guys, I've got this thing you've never ever thought of. It's Adam Back. And everyone's like, what? We thought about this years ago and we decided it wasn't him. The one thing this guy has done, which is, novel, is that he used, I guess, AI to run through a whole bunch of Adam Back and Satoshi's writings and gone, using stylometry, I can prove with 100% certainty that, maybe not 100%, but he's saying looking at these things, there's too many similarities to ignore. Adam Back is Satoshi. The thing I find funny about this one though is that they've already did this. Obviously not with. I think they did 34,000 documents or something. They've done this before, not with that many documents, but they've done a bunch of sort of linguistic studies on Satoshi's writings and tried to compare it with other likely candidates. And the one they came up with before was Nick Szabo.
Yeah,
So-
that's right. I remember seeing about this.
And this is they did a whole video on this thing. Sorry, they did a whole thing where they go, yeah, we've looked at his writings. We look at Nick Szabo's writings. This is the most likely candidate. And it strikes me as interesting that they do the same thing and come out with a different person. It's like, okay, so
Which one is it, guys?
yeah, if you're doing the same thing and coming up with different results, I'm guessing your methodology isn't so robust. Back in 2020, there was this big video by, I can't remember who it was by now, but they basically came out and said that Adam Back was the guy as well. They said, and this is why everyone's sort of like, oh god, here we go, because Adam Back has already been accused of being Satoshi, and they said because of, I can't remember what they said it was for, but It wasn't his stylistic, like his writings. It was some other reason. And Adam Back was like, nope, nope, not me. It
Was the
wasn't
double
me.
spacing, wasn't it after a full stop? They said that Adam
Yeah,
Back,
which
because he's
is-
British.
Which is the most ridiculous. Like I used to put 2 spaces after my sentences. Like you got to, when you're a kid and you're writing
were
an
taught
essay,
that.
well, you got to pad it out. If I'm going to get 2 pages for my essay, I'm never going to get there with single spacing after a full stop. I need 2 spaces. Yeah, it's kind of funny. Like Adam Back sort of going, no, it's not me. It's like my 4-year-old. Like when you accuse him of something, no, not me. Except in this case, it actually wasn't. Unlike my 4-year-old, it actually wasn't Adam Back, as far as I can tell. But yeah, I don't know.
There's some conspiracies in the comments.
Oh yeah, what do we say?
Sonet's brought some conspiracy.
I'll say it off camera. A great way to divert the story of Adam Back taking Epstein money and visiting the island with the co-founder Austin Hill.
Oh man,
Ooh,
this is deep state kind of stuff.
Did he go to Epstein's Island? Now, well, Epstein, I don't know, like, obviously Epstein didn't kill himself, but, like, it's fascinating that, like, if you really want to subvert, like, if you want to get international control and subvert a bunch of people, all it really takes is just prostitution. That's all they did. That's all he did. He just went and entrapped people by just, like, inviting them to his
Yeah,
island.
yeah.
And all these dudes
Yeah.
all, like, fell for it. And now Bill Gates, like, got himself, what would he give himself? He got himself an STD.
Yeah.
And he believed, and this is all the emails are out there, and he like trusted Epstein so much. Instead of just going, I'll keep this off the record and just talk to a doctor, he wrote to Jeffrey and be like, hey dude, I've got an STD. How do I get a pill? And I think I might have given it to my wife. How do I crush up some medication and put it in her? Like,
Why would you ask Epstein?
exactly. Like,
I guess you think he's done this before. Like, he's a shady
so
character
last time you had some dodgy dealings.
He's like
how'd
the
you
wolf,
fix it?
right?
How'd you fix this? How'd you
Yeah.
fix
Yeah.
it? You're the
Bill-
fixie. How do I do this?
And Bill Gates isn't an incompetent person. He's got people for that.
And I
you'd think.
and I would have thought Bill Gates knew his way around an email and traceability.
Yeah, you would think that when you.
He
Like
could have at
I
least
sent an
called
email.
him and be like, Jeff, mate,
Yeah.
didn't. Or could have called his doctor, doctor patient privilege. Anyway,
Yeah. Anyway,
Maybe-
back to Adam Back. I think there was a guy who released a bunch. Instead of analyzing his writings, they analyzed his coding, and the guy was like, these 2 dudes code completely differently, and this is sort of looking at coding that happened prior to Bitcoin coming out. So yeah, I don't know. I think this is a bunch of nonsense. I feel like John Carreyrou is out there like looking for his next big win and thinks he's like the golden boy who can do no wrong.
I expose everything.
Yeah, and it
He's the
doesn't.
Peter Schiff of the expose world. He's still
Yeah.
riding high on a victory from 2008.
Yeah, that's my like cynical feeling. So someone else in the comments, sorry, you've taken it off too quickly and I couldn't read who it was.
Hal Finney. Oh yeah, Hal Finney.
Kyratus suggests Hal Finney was also implicated. Yeah, Hal Finney's my best guess.
Well, he was
So-
right there from the beginning, and he was the
Yeah.
first guy to run Bitcoin with Satoshi.
Yeah, and he's dead now, like which kind of like fits in with all the like what we know about Satoshi and that he doesn't seem to be around anymore. There was an interesting thing where I think it was like in the SegWit wars. This is like the block size wars rather. The Satoshi email address came alive for the first time in like 2 years or something like that out of nowhere and then disappeared again. Like it sent an email, but it was the email like we think. Well, the thought on this
You.
is that me personally, I believe what I know to be true is that Satoshi actually gave the email credentials away to some other devs just in case, and some other dev was like, I can't stand this anymore during the block size wars. This is like back in 2021 or something, and came out and sent an email from Satoshi's thing saying, we should do SegWit or whatever it said, and it wasn't actually Satoshi. So, which would sort of, assuming that's true, then the Hal Finney story is alive and well, kind of thing.
So I've had a look. Every single photo of Hal Finney, he seems to be staring into the sun directly. And a comment here from Skynet. Hal Finney was confirmed to be on a marathon at the exact time Satoshi was emailing, so it's unlikely to be Hal.
Well, I mean, there is such thing as like, delayed emails and whatever. Like, depends on how deep Hal wanted to cover. There's one there. I can see his eyes.
Oh yeah, I think he's dead.
Back in the day of dial-up, maybe he'd sent the email and his wife just connected while he was away. I don't know.
Yeah, who knows?
RIP, how
I
Finney.
mean, it wasn't dial-up. It was 2008 or 2009 or whatever. So,
I'm
like,
just talking shit.
we did have internet, normal internet.
I'm just saying, maybe it was anyway. Whatever.
And that Caratus says in Craig Armstrong on
Craig?
Sean Ryan's podcast says it's Hal Finney in collaboration with Szabo.
Yeah.
Don't you think that I mean we always assume it's one dude where it could be a collective group of dudes, right?
It'd be a pretty impressive. Like I agree, I understand that theory, but I just think to keep it this tight, to have multiple people keep it this tight.
I think Szabo's passed away.
that
hasn't
is
he? And
no, he's still around.
so there's another one of those guys that passed away,
I don't
and
think
then
so.
there was
Just Hal.
just how I thought there was another one.
Really? Oh, maybe.
Guy with long hair.
Don't
Anyway,
know.
whatever.
Yeah. So
Just making stuff up now.
yeah, but I mean, it would be very impressive for, say like a team of 3 or 4 people, all to keep it this tight. Like that's more impressive than it just being one guy who is exceptional, if you ask me. The fact that no one out of, the team, and Craig Wright claims he was part of this team as well. That was his old story.
Oh,
but-
one thing I really would love to get up here, because if I've watched it, so you have to watch it. It's one of those things. Craig Wright dancing.
Oh, is this the one where he's really drunk?
Yeah.
And he's talking to that woman reporter?
Yeah.
Oh, it's horrible. Yeah, I've seen
We
that.
have to. We're not leaving until it comes up.
It's actually, yeah.
No, I watched it, and now you have to watch
He's
it.
so wasted. It's not,
Yeah.
it's not good.
And it's just like, if this guy was Satoshi Nakamoto, I'm selling
No,
my
it's
Bitcoin.
not that. That's
No,
definitely not. It's like in a club, and he's like talking to her, and she's like, "So, what's your favorite drink?" And he's like, "You." No, he doesn't say that. That'd actually be kind of smooth. It was like really unsmooth. It was.
If you just Google Craig Wright drunk nightclub, you will pop up, and this will be the most like your face. It's like eating a lemon. Your face
Yeah,
will be
I
sucked
hate it. I
inside of
hate it.
itself because you'll be like cringing so hard. No, I don't
What?
know. This is Robin
This is-
Wright.
This is Game
Jared,
of
what are you doing?
Thrones.
Craig Wright drunk nightclub. And we will subject all our audience to it. And you'll need to. What's the opposite of like lemon? Like I don't know. Like
Click videos. Let me tell you how to use a computer.
this is the first time Jared's googled.
No, no, it's none of them.
Oh,
Okay, we
no.
can't find it. It's not available.
Next week I'll
He
bring
must
it
have
up there.
used his incredible
Be,
wealth
be
and power.
prepared. Be prepared. I have warned you adequately that next week when I show you that video,
Yeah.
you might have to have facial reconstruction because
Just
it will
Just
be
hope
like
the
the
wind doesn't
power of
change.
20 lemons being sucked on it at once. It is that
Yeah,
cringy.
it is so
It's the most
bad.
powerful cringe known to man.
Is it as bad as Facebook's sister?
Way worse.
no, it's worse. Yeah,
Worse.
It's worse.
Like
Like at
rant-
least just sort of got some production value. Like
Yeah.
this thing is just raw. It's raw and uncensored.
You've been warned, all right? You've been warned.
But
Don't
we're-
come for you.
We are talking it up. Like it's probably not going to be that bad if you're watching.
Oh,
it.
no. You've blocked it out of your memory. It's like trauma.
It's-
You
yeah,
pretended.
I remember not liking it at all, and I was like, I want to turn this
Understandably. Like, I distinctly remember going, I've watched this. I'm going to forward it to someone because I have to share the pain.
You have to send it on to 12
a problem
people.
shares, a problem
Or
halved.
the curse on your
Was it from
family.
YouTube?
I can't remember. It doesn't matter. Maybe YouTube went and banned it because they're just too many people just like having facial reconstruction.
Yeah.
How's your Civil War reenactment commentary going?
Can we get that up? Please. One of my okay, sorry.
Now we're going to do some
talk
more
about
pointless
first.
googling.
One pointless googling. Henry West Gaming. I love that guy. Like, sorry to shout out if he's listening. This guy, he is owning. Oh, there's this guy.
Hang on, wait, let me.
I was thinking of Henry West Gaming, but you can show that one too. That guy's that's one there. Yeah, like, last week we talked. Actually, I forgot we had these queued up because we talked about various things that we're into. My Instagram feed is cluttered with this type of commentary. Anyway, this is not cringy, but it's.
Is the audio going to play?
You're just getting a
Yeah,
little peek into my
play on the.
this guy here. But we've got no sound though.
Well,
It's
maybe-
not the same without the sound.
Can they hear it? Can they hear it?
Probably not.
Cool.
It's just some
So
dude
it's just a
playing
guy
computer
playing a
games.
computer game.
It's not the same. You got to get the commentary.
Clearly. I hope this isn't what you do all night.
Yeah. We brought up some Henry West Gaming. So, yeah, sorry, we
that
failed
was-
on that one because we promised you would. Anyway.
I'm not sure. I don't want to be involved in this fail. Like this is you and Jared.
No, this is Jared.
What are you talking about?
You've got no sound.
Oh,
This would be way better with sound. I feel like, in fact, if you just had the sound and no video,
Why
it would
don't
be
you
better.
do the dub? You do a dub.
I can't do it justice. I can't do it justice.
townspeople,
Yeah.
He's Beddish. Anyway, that's a funny dude. But Henry West Gaming, he just like one of those dudes. Like he dresses up in the character of whatever game he's playing,
Right.
and he's like doing the simultaneous live stream while he's
Wow.
acting in character while he's doing the game that he's doing, and he's pretty funny. Anyway,
I'll put some links in the description below.
if any West is watching, I'm pretty sure I've got his name right. I'm a big fan. Anyway, all right. That's been fun. Except for all that talk about regulation and quantum computing. We're just 80% of our content.
You have to slog through it.
We're going to, like, our best clip this week is going to be us showing a video of someone else.
With no audio.
With no audio.
Yeah, okay, thanks.
Anyway, well, next week we will not be back because I am going to be at Money 2020, a conferencing. But we'll be back the week after with uninterrupted from there on in, because Nick's never allowed. Well, actually, no. We've just established you will be on holidays every second week, so we can get this Bitcoin price moving again.
Yeah, that's true. All right, I'll do my part.
I will not be. Well, I've seen here the whole time.
What's Money 2020? Some conference?
Yeah. Money 2020 is all about. It's less crypto. It's more about the fintech payment space.
Okay.
So it's all about the the up and coming businesses that are competing with the banks.
You're going to sell some Morgan Stanley ETFs?
How did you know? Yes.
Yeah, report live.
Report live? Yeah. Can we? We'll do it live.
Figure something out.
We'll figure something else.
Okay.
Then you guys can chat amongst yourselves, and I'll live cross with some commentary.
Yeah, all right.
Done. All right.
It's going to be no audio again. Just Lee.
All right. Well, thank you, Jared. Thank you, Nick. We'll be
thanks.
back again in a fortnight's time, if not before. We'll keep you posted on the socials, of course. Thanks for stopping by.
Cheers.
Bye-bye.
Lee and Nick with the moonshot flow. Dispatch live, let the market glow. Crypto vibes where the numbers show. To the moon we go, let the podcast blow. Digital coins, we dissect them quick.